A huge problem with most traders is developing a concrete process for themselves and then putting that list into use effectively, knowing which levels to mark off and exactly what you're looking for on the chart on a day-to-day basis so that you can be successful. Ladies and gentlemen, in this video, I'm not only going to give you that list step by step, I'm going to show you lots of examples of exactly what I do every single day so that you can replicate it for yourselves. I really hope you enjoy the rest of this video. If you do, hit that like button, subscribe to the channel if you have not already, and enjoy the rest of the video. Before I could really even get started, there are some very important details that I need to cover. But if you want the slideshow, as always, the link is down in the description below. All you have to do is click on it. It's free. You download it as a PDF. It's yours forever. Print it off. Follow along with this video, whatever you would like. So, some of the details that we need to address. What session are you trading? Asian session is from 8 p.m. to 11 p.m. That is the opening range for the day. London session is 2 a.m. to 5 a.m. Eastern time, and that is the initial balance session for the day. The New York session is 8 a.m. to 11 a.m. Eastern time. The beginning of my day starts where this period separator right here is. All right, if you just turn on period separators on TradingView or MetaTrader or whatever, that line will print and you will have candlesticks that start the day. That's where the beginning of my day is. I've had a lot of questions about where I start my day. It's the candle after that period separator, okay? So which setup are you looking for? For example, if I have a signal day such as first red day, first green day, inside days, 3 days of breakouts, those are all signal days. 3-day cycles, day 1, day 2, day 3. The weekly template, Monday, Tuesday, Wednesday, Thursday, Friday. What day of the week is it? Is there a trade setup based off of that weekly template? Either a reversal from the high of the week, the low of the week, or a trend continuation style of trade? Is it a high of day or low of day trade? Is it a session trade? Those kind of questions need to be answered before your session even starts. You need to know what you're looking for in your session on that pair before your session even starts. You should go into your session with a plan. How will you narrow the setup down to the minute of entry? Be specific. Things such as the time. What time is it? Are you going to trade in that first hour? Me personally, I do not. I wait for the second hour. What levels are you looking for? And on the next slide, I'm going to show you exactly which levels I mark off every single day. Are they trapping in a certain area of the chart using candlestick behavior? Are they trapping in 3 pushes? Are they trapping volume above a level, below a level? Things like that. Has there been 3 pushes? For example, if there's been a break of or in structure, have they done the 3 pushes back down or up against the trend in order for you to take that trend continuation up or down, whichever way that trade's going? And then, are you specific enough with your entry criteria? Now, I'm going to give you my entry criteria in this video, but it doesn't necessarily need to be mine. I trade off of the 1-minute chart. If you want to trade off of the 3-minute chart or the 5-minute chart or whatever and develop some kind of process for yourself using those time frames, that's fine. I don't do that, so I'm not going to educate on those pieces. However, just know that you need to have a very specific thing that happens in the market that tells you, hey, this is my time to enter. I'm going to enter in with confidence. And if it doesn't go my way, I'm going to reduce risk the best that I can. So before the day even starts, and usually for me being on the East Coast of the United States, when the day ends, I am capable of going through and doing my analysis for the next day. I can go through the chart while the market's still closed, analyze and see, is there a signal day? What day is it in the 3-day cycle? Obviously, what day is it in the week? Weekly template, what are my levels? What am I looking for on the next day? And that way, when I come into the next day, I can see what the chart has done in relation to what I thought was going to happen, and I can make trading decisions based off of that. So this is all the things that I do on the day prior to prepare. My analysis. These are the details, the must-haves on the chart. They're not very difficult to identify. You could easily do 5 to 10 pairs and maybe 20 to 30 minutes, and it's not going to be very strenuous at all. I'm going to look for signal days. I'm going to look for those first red days, first green days, inside days, 3 days of breakouts. All of those things are very easy to identify, and if you've ever sat in with one of my live streams on Tuesdays and Thursdays at 5 p.m. Eastern time, you know that all of these things can be done fairly quickly. I also look at the weekly template. I'm going to draw out my opening range. That is the high and the low of Monday. I'm going to see, was Monday an inside day? Yes or no? In this case, yes it was. Okay, so I can annotate that. I'm going to look at my structure. So for example, this day closed down here, and we have a high, and we have a low. And we have basically a structure within a structure giving us our end of day consolidation. So I will mark off those levels. That way, when I come into the next day, I can see what the market does in relationship to those levels. Then I said, like I just said, I mark off my end of day consolidation, and I use my pips to profit indicator, which is also in Discord. Link is down in the description below. It's a free indicator, and it gives you all of these different levels, the days of the week, all of these different things. It's an all-inclusive indicator, but it's going to give you the previous month, week, and days level all in one indicator. Fantastic. I don't have to go through and mark those off myself. The indicator just does it for me. Then I also have, like I said, the days of the week, which again, indicator will just do it for me. The minor details. Now, these are very easy to spot. They're not necessary, but it does give me a slight indication of where price could go on the chart and why. And it just kind of gives me a little bit of extra, hey, this is there, it exists. If the price starts to go in that direction, then this might be where it's going. Kind of gives me a target for where, if I'm in a trade, where price might go to. And those are price to level gaps. For example, notice how the market has closed over here above the previous day's low. That's a price to level gap. They basically closed the market or traded down and did not hit that level, and then went into consolidation. That's kind of a red flag for me that, hey, they might come down and get that level at a later time. Inside bar trader stops. So like I said, Monday was an inside day, and then they triggered the low of that inside day. An inside day is essentially an inside bar on the daily chart. Now, this is a 15-minute chart, and that means that once we triggered the low of that inside bar on the daily chart, that's going to put stops up here at the high of that inside bar. The reason being, other time frame traders who are trading off of the daily charts are trading the breakouts of those levels, and they're putting their stops back at the other end of the range. So I like to put that annotation up there to allow me to see, hey, maybe the market might go back there later in the week, or maybe even later in the day. Again, just giving me price targets, or really just considerations in my brain for what the market could do based off of what it's already done. And then I also look at breakout trader stops. Usually these are going to be very clean levels in which they have passed through a previous day's high or previous day's low. For example, notice how they broke out, pulled back, and then continued, which means that it was not a clean break. If it was a clean break, they would have just gone straight down through that level. There would not have been any retest whatsoever, and I would then have marked off breakout trader stops there, being that, again, people trade breakouts of these daily levels, and they will put their stops at break even or maybe like slightly up into the level, and that just tells me, hey, there's stops sitting there. Again, an area where the market might go back to get the money. Now, before your session even begins, when the day starts, I get to the session about 30 minutes before it begins. That gives me time to analyze what has happened in relationship to the analysis that I had done the night before, and it gives me time to mark off my levels on all the pairs and prepare for the day. Before the session begins, you need to basically ask yourself a few questions. What trade setup was I looking for on that pair? And then, is it doing what I expected? Yes or no? What time are you looking to take your trade? Me personally, I will not take trades before 9:30. And I'm looking to take a trade in that second hour or that third hour after 9:30. I do not trade before the news. The reason being, before the news, usually the whole market is some kind of manipulated event. And after the news, a lot of times the news will manipulate the whole entire market. It'll turn into order flow. And I usually want to try and wait until all the pieces are on the board before I make decisions. Some more questions to ask yourself is, where is the high and the low of Asia? Because that is your opening range for the day. Where is the high and the low of London? Because that is your initial balance for the day. Where is your gap time high and your gap time low? because a lot of times those levels also come into play as far as where is the money at, right? The market goes back to those areas. It can manipulate them. It can basically jam up into them or whatever. Has there been 3 levels of rise or fall using the numbered boxes? Okay, that's the 100 pip boxes. And you can measure that from the current high of day or down from the low of day. I'm sorry, down from the high of the day or up from the current low of the day. You can also measure from the previous day's high or down from or up from the previous day's low. All right, and I'm going to go over that a little bit more in detail next week. During the session, once the session has begun, what am I looking for? What am I doing? I need to mark off that first hour's high and low. So basically 8 o'clock for me, being that I trade in New York, right? The first hour is 8 a.m. to 9 a.m. Eastern time. So I'm going to mark off the highest place that that hour has traveled and the lowest place that that hour has traveled, because that is the session's opening range. That's going to give me some more levels to work from. Then I can look at the second hour. That's either going to be my trap or it's going to be a trade. Then I'm going to, if they extend those levels, just like you would for the initial balance on Tuesday, if they extend those levels either high or low, I'm going to redraw my high or my low. And then in the third hour, if I have not taken my trade, I'm looking for, is that third hour going to be a reversal or a continuation of the second hour? Something important to note, based off of what I just said about the third hour, the market only does 3 things. Pretty much everything to do with this strategy has to do with these 3 things. It's the idea that the market is either going to break out and trend. It's going to break out and reverse, basically a failed breakout or a false break reversal, or it's just going to stay in a trading range. Everything that we do in this strategy, all of it, the levels, even really the timing, it's either going to break out of a box and continue, it's going to break out and fail, or it's just going to stay inside the box. And then we just need to look for the signatures of one of those things happening at certain times of the day to make accurate trading decisions. Now, I'm going to walk you through an example of the whole process. I'm going to show you step by step so that way you can just record it. Well, it's obviously recorded, but you can go back and review the exact steps that I took because it's very repetitive. I do the same thing every single time, and that's the way it should be. Your trading should be very repetitive. It's not some new fancy awesome thing every single day. It should just be the same thing every single day. Day in and day out. Rinse, repeat, do it again tomorrow. All right, so we're looking at Monday, Tuesday. What's the process? The process. What do I do? Well, I'm looking for those things, right? I'm looking for signal days. I'm looking for what has happened in relationship to the opening range. I'm looking for structure. I'm looking for that end of day consolidation. I'm looking for little things like, hey, has there been price gaps? Where could the price go to based off of pump and dump and blah, blah, blah. Okay, so let's take a look. We have Monday, opening range. Now, Tuesday has broke out of Monday's opening range and closed back on the inside. That's really what I care about on a Tuesday when we're talking about the relationship of the opening range. I'm looking at how did Tuesday close and what did it do? They broke out, they failed, it closed back down here. Now, next thing that stands out to me is the fact that that price has closed above the previous day's low over here, leaving a bit of a gap. So what I'll do is I'll annotate that with some kind of line. It could just be a vertical line. It could be a horizontal, not horizontal, but diagonal. Something that basically lets me know, hey, there's a gap between that price and that level. Because when the next day opens up, there's going to be a new previous day's low here, and it's going to create a gap between that level. Okay, so that's the price to gap level that I was talking about in the slideshow. Now, this close right here usually indicates to me that because there was a failed breakout, they might be going to the other end of the range or going back down towards the low of the week. That's really good. So I can annotate that, hey, we might have trapped volume at the high of the week. All right, I'm going to get that up there right now, something like this. It really doesn't matter how you annotate it. You can be creative, or you can just be plain like me and just put trapped volume, something like that. All right. Now, I need to get my end of day consolidation on there. This is simply just the low and the high, the last swing low and the last swing high of the New York session. Basically, whatever area creates some kind of rectangle at the end of the day, that's what I'm going to mark off, because that's where I have found the market usually creates some kind of consolidation. right? So for example, I noticed that that's where the day closed. Low, there was a structure within structure kind of thing going on here. So I'm just going to mark both those things off and label them EODC, end of day consolidation. Now, this end of day consolidation is not anything particularly special. It's just to help me gauge what the market has done. Is it breaking out? Is there a failed breakout? You know, what has happened leading into my session that could indicate what my session is going to do? Now, a lot of times I will delete these levels before my session begins, but I want to just use them in relationship to before my session. So we've got no signal day that I can see here. We have a failed breakout. So now we're basically looking at, one of those questions was, what setup am I looking for? Well, we had a failed breakout on a Tuesday. Number one, that's going to initiate day 1 3-day cycle. We had a failed breakout at the high of the week, and we've closed on a Tuesday back down on the inside of the opening range, looking to go towards the other side of that opening range. That's the setup that I'm looking for. Trend continuation on day 3, which I'm just going to say that's a Wednesday. I'm referring to a Wednesday. I'm looking for a Wednesday parabolic trend continuation of the move down on Tuesday, down through this level. Okay, so now let's fast forward this chart a bit, and we're going to let it get all the way up to the New York session. And then, let's see, what time is that? Okay, that's 6:45. So we need to get up to around right there. Cool. I've kind of revealed some things. It's all right, though. We have the low of the gap time. Before the session begins, that's the area, or one of the areas that I'm going to mark off. I'm going to mark off the low of London. I'm going to mark off the high of London. I'm going to mark off the high of the gap time. These are all areas that the market could react off of. I'm going to remove some of these end of day consolidation levels. I'm actually probably just going to leave that one there and leave this one down here. However, I have all my levels marked off pre-market. All right, I've got my high of London, my low of London, low of gap, high of gap, and now I just need to wait for the session to begin. Now, once the session begins, all I'm doing is waiting for the first hour to trade. Pretty simple. There is 8:45. That means that at the close of the next candle, I'll be able to see where was the high and the low of the session. So there is 8:45. I can draw the low at this point down here. The high of the session is still all the way up here, so I'm probably just going to leave that level intact right there for now, because they did not extend the high, they've only extended the low. I'm going to first off, mark off this. New hours began, so that way we can visualize the separation between the hours, okay? Now that the second hour has begun, I can let that trade until 9:30. There's 9:30 right there. Goes up. Okay, are they going to take the high? Right, so they took the high right there. 10 o'clock just began. Have they extended a level? They went lower in the second hour, but they did not close lower. So what I'm going to do is I'm just going to leave that level down there, and I'm going to, first off, mark off my 10 o'clock. There we go. And let's see what happens next. Okay, so they pinned up again. They pinned up again. You can see that they are working this level now. They are really working this level. I would be on the 1-minute chart, and there's the continuation. Now, it was at the end of the session. There was really no trend continuation in the session. However, they're not all going to work out. That's okay. I'm not even going to bother cherry picking or anything like that. But I do want to go down to the 1-minute chart and just talk about my entry criteria. So if I'm watching this, all right, and I've got a high and I've got a low, I want to trade from those levels. I want to trade from the extremes. All right, so if they've extended the box, that's cool. That's all they've extended the box. That's all I know. And then when they go to the top of the box, I know that I'm looking for certain signatures. I'm waiting for them to complete my entry criteria. What is my entry criteria? I need a high and a low, high and a low. I need them to break and make a lower low, or just really a new extreme, right? This is a break-in structure. So if I have a break-in structure, I then need them to push back up into the high, which this is the high. This is the low now, in 3 pushes. So if I get some kind of 3 push pattern back up there, and then after I get that 3 push pattern up, I then need an M or a W and an engulfing candle to complete that pattern. I take that entry after the M, basically an engulfment of that M, I would take it down. Now, there was no entry criteria completion here on this pair. Let's go find one where it did play out. Okay, here we go. So same exact process. All right, we have the low of London. We have the high of London. We have the high of the gap, and we have the low of the gap down right before the session begins right here. Now, one of the things that I immediately notice is the strong move at the beginning of the session. Coming down, a lot of times the beginning of a session is a false beginning, some kind of false move to get everybody induced into the market. Notice that they trade down through or down to London. That's why I use this as my box. You can also use the low down here, low of the day, the overall day. That's fine as well. I'm going to mark off my middle hour right there. And let's mark off the low of the first hour. Not even worth it because we have the low of London. Now, let's mark off the high of the first hour, which is actually up here. And I think that's probably not worth it either because we still got levels intact up here. I can go down to the 1 minute chart now, and we will take a look at what the price looks like within here, and I can explain my entry criteria. So there's my third hour as well. Let's get down to the 1 minute chart, and we will take a look at the entry criteria on all of my trades, no matter what trades I am taking. So, like I said, I need to see lower lows, lower highs, or higher highs and higher lows, and then eventually I need to see them stop doing that, and I need to see them shift and go the other direction. So, for example, we have a low, high, lower low, and then from there they come up and they actually make a higher high. And I can't use that level because that's a 1 bar pullback, so I'm going to have to use something over here. It really doesn't matter. They make a higher high. That's the big takeaway from this. And then they come back down in a 3 push variation. Normally, I would need to see some kind of MW. In this case, obviously, it would be a W. So I would need a W down here. After this break in structure, they were going lower, lower lows, lower highs. Then they made a higher high. I would need them to trade back down 3 pushes, give me a little W down low, engulf that W, and then go in the intended direction. On the engulfment, so let's just imagine this is a W. I understand that it's not, but if there was an engulfment down here of that W, I would take the engulfing candlestick as my entry. I would use 1 or 2 candles on that 1 minute chart, but never more than 20 or so pips, and then take that trade wherever it's going to go. Preferably back to the high of the session, preferably back to the high of the day for a good risk to reward. And that's the process. Mark off your highs and lows within the session. Mark off the gap time, the actual high and low of the day. Making sure that you have your previous day's highs and previous day's low marked because I want to see if other time frame traders are in the market. For example, notice that they have been breaking out of previous day's lows, which really tells me, hey, there might be other time frame traders driving this market. Basically, people on higher time frames who are trading those higher time frames are driving this market whenever these levels are broken. Big key, but past that, going past that, that's very easy to identify. Just marking off certain levels of the chart every single day before the session begins. London high, London low, gap time high, gap time low, first hour high and low. Does the second hour extend it? Yes or no? Go down to the 1 minute chart and search for the entry criteria. Let's go over that entry criteria one more time just for the sake of being consistent and being thorough. So number 1, I need the market to be in current trend. All right, it could be in a downtrend, uptrend, whatever that may be. Then I need a shift in the other direction. Basically, for example, if we're making lower lows and lower highs, they make a higher high. Or if we're making higher highs and higher lows, all of a sudden they make a lower low. So BIS, break in structure. And then from there, after they make that break in structure, I need 3 pushes against the new trend. So if they made a higher high, 3 pushes back down. If they made a lower low, it would be 3 pushes back up. Once I have those 3 pushes, I am now looking for a chart pattern. M. That could be a W. That could be a head and shoulders. That could be a inverse head and shoulders. That could be a triple top or triple bottom. All right. Now, once I have one of those chart patterns, I need an engulfing candlestick pattern. Engulfing candlestick pattern, basically to engulf that chart pattern. Now, that engulfment is going to be my entry every single time. And then I put my stop in place immediately. Entry, stop, and then target. Oh, I guess that would be 8, wouldn't it? We'll do 8 down here. Something like this. And that will complete the process. All right, that is as in-depth as I can possibly get with entries, with which levels I'm marking off, how I'm doing things on a day-to-day basis. Like I said, I'm going to be going over the numbered boxes next week. On that video will be out next Saturday. But other than that, these are the levels I'm looking at every single day to see if the market's going to break out and fail, break out and trend, or to stay inside of a trading range from high to low. The main goal of this video was really just to help people to identify which levels to draw, what line to draw, when to draw the new high or low. If you have a box and they extend the box in the first or the second hour, extend the level. If they're trapping down low and they reverse back up, it could be a failed breakout of the first hour. It could be a failed breakout of the second hour. If you have a larger trade setup in place, such as like first red day, first green day, and you're expecting a buy low, then now you know what to look for. You have your levels drawn and you know where the market may go to for you to get some kind of reaction, for you to get your trade buy low or sell high within your session. Ladies and gentlemen, I really hope this video has helped at least one of you. If it has, hit that like button, subscribe to the channel if you have not already. You all enjoy the rest of your day.